This is episode 257 of the Andrew Hines Real Estate Investing Podcast. And now a word from our sponsor, Control and Compound.
Infinite banking in under 60 seconds. We've all got to save our money somewhere, and we think that a high cash value life insurance policy is the perfect place to save it. Why? We're going to save our money inside this policy, and it's going to grow tax-free. Down the road, we're going to get hit with an emergency or an opportunity, maybe a chance to buy a business, real estate property, an income-producing asset, and instead of withdrawing from our savings account, we're going to leverage that asset. We're going to borrow the insurance company's money, and we're going to invest in that opportunity. Our money is still inside of that policy, compounding, uninterrupted, tax-free, and our money's outside in this investment opportunity. We're going to rinse and repeat, all while providing a death benefit for our families. Down the road, we're going to retire. Now we retire with a high cash value life insurance policy with a lot of cash. We're going to start taking those policy loans again, but this time we're never going to pay them back. When I say never, I mean we're going to pay them back with the death benefit when we die, and our families are going to get left with the rest completely tax-free.
For more information, visit www.controlandcompound.com/Andrew Hines. Welcome back to the show. Today I have a name you're probably familiar with, Daniel Foch. So Daniel is a real estate investor. He's a Canadian podcast host and sort of data analyst for real estate. He came onto my radar just from his Instagram reels, which kind of blew up, and it's just him basically talking in front of an article, giving some facts. Daniel is very well studied. He knows his stuff. He can put, we have a lot of similar thoughts on things. It's just he has the technical analysis to back it up. It was a really cool episode, great discussion with the guy. And yeah, we just went back and forth for over an hour, just kind of running through how he sees the economy, where he sees opportunity, you know, what he thinks is going to happen with immigration and how these things are going to affect home prices in the future. So topics like inflation, interest rates, and the future of Canadian home ownership, you're going to get all of that and more here. So a reminder, if you're enjoying the podcast, the only way it really grows is if you share it, if you tell people about it. So please do that if you're getting value out of this. And if you're new to real estate investing and you're just kind of looking for the nuts and bolts, I highly recommend going back to the first 10 episodes of the show, you know, even first 20 if that's of interest to you. Those earlier episodes are very foundational. We really dug into the basics, whereas now we're more advanced and even the questions I ask nowadays are much more assuming that there's a base level of understanding already there. So if you're not getting it, that's the appropriate approach, and it will definitely help you. And I would highly encourage you to come right back up to these current episodes and follow along, ask questions in the comments as you have them, and you know, we'll make sure we get a response to you. With that said, let's go ahead and jump into the episode with Daniel Foch. Please enjoy. Hello and welcome to the Andrew Hines Real Estate Investing Podcast. I've got Daniel Foch on the show, and I just started seeing your reels on Instagram at some point, which were just killing it. So
yeah, thanks.
And then I looked up your podcast, and you guys are doing really well. You went from 0 to 1,000 very quickly.
Yeah,
miles per hour, that is. Yeah. So yeah, but for those who aren't familiar, why don't you just give the scoop what your story is?
Yeah, Daniel Foch, host of the Canadian Real Estate Investor Podcast alongside Nick Hill, and I'm a real estate broker. I mean, I guess most real estate brokers are kind of like at 50% volume compared to last year. So probably a lot more of like an analyst now as well, doing like a lot of research work and analytical work for some clients in the space. Yeah, I mean, that's kind of a summary of what I do. And then I take a lot of that research that I'm doing and just kind of like try and repackage it for the public. So making like TikToks and reels and tweets, and I don't know. I really like making content and just like educating the consumer. So that's kind of probably my primary function.
And are you finding, so like, are you mostly the commercial focused as a broker?
It's funny, like, not really. I would say like I'm probably 50-50. And I think I've always laughed at like the distinguishing between commercial and residential, especially in Canada. Like even on like even on the commercial side, like most of like the bigger commercial deals are like real residential land development sites, right? So it's still functionally residential.
Yeah.
Well, like there's not a ton of like I don't really even call it commercial because like I don't sell like office buildings. I don't sell like the odd retail plaza, but it's like But
multifamily, I think people go with what the lenders are treating as commercial, right?
Yeah. So I guess if it's multifamily, then yeah, I do a lot of that stuff. I do like a lot of investment, but even investment still houses. It's still like duplexes,
for sure.
fourplexes.
But just investor focused, like where you're thinking more about cash flow and which is obviously a bit of a unicorn here.
Yeah.
But it's still possible.
Yeah.
And then are you so you're helping like homeowners as well?
Yeah, I have no I don't discriminate against clients, right? Like whoever it is, I'm happy as long as I have the time. If I don't have the time, then like I'll send it to somebody on my team or within the shop or like within the brokerage or within my network that's better suited to do it. I just like if somebody comes in and I'm not the best person to serve them, I'll make sure I can connect them with the best person to serve them.
What's the brokerage?
I'm at Rare Real Estate.
Rare? Okay. Not familiar with that one.
Yeah, it's like a smaller brokerage. They're like the ones with like all the sexy black and white stuff, and
nice.
Very young. I don't know, it's a great company. Honestly, I'm pretty happy with it.
Cool. Yeah. And what's your background?
I worked at like a lot of institutions as a co-op, and then I did a BCom in real estate at the University of Guelph, which is a great program, and I got an awesome network from that. I think at the time it was one of only 2 real estate undergrads.
Real estate focused business program.
Yeah, so there was UBCs and then Guelphs, and now I think Ryerson has one, and you're starting to see more evolve. But in the US, it's super common. So it was a BCom, so like just a regular business degree, but it more focused in real estate. So that's kind of where I got a lot of like the analytical side and the underwriting capabilities. And then I did a bunch of co-op work. Realized that like I loved the industry. Just didn't really, I just like suck at being corporate. So took as much as I could and kind of tried to figure out how to build a business out of it on my own. And I think it's just so ironically Canadian. Like if you're an entrepreneur in Canada, you're basically a realtor, right? Like it's like the primary stream of being an entrepreneur. I mean, like you know.
Like entrepreneurs, like even like you ask accountants, like what's the number one source of wealth? They'll say, oh, real estate investment, because they see it, right? So everybody's like to some degree involved in real estate. You're saying also a realtor. I'm not a realtor.
Yeah, fair enough. Not yet. Or were you ever?
I thought about it a bunch. I was doing mortgages for a while, and then I just I ended up doing construction and development. Now I just do various entrepreneurial things.
Right. Yeah. So for me, it's like I just couldn't. I don't know. I couldn't really imagine, or like I couldn't really figure out a way to make money in the Canadian like business world other than that.
It's the most obvious thing, right?
Yeah. And I think most people like see that too, and it's contracting now, but I think a lot of it is like the Canadian economy doesn't have much. It's not like the US where it's like a super diversified economy.
Oh yeah.
Where where there's like this huge scope of businesses that you could really do well in if you just went deep in it.
And the mindset there is just so different too.
For sure.
Like the people down there, like the way their brain works and what their expectations are. Like I'm talking about the entrepreneurs.
Yeah.
It's like way up here.
Sure.
Canadians are like we'll just keep it very reasonable.
Yeah.
Americans are like, we're going to go get $1 billion.
I think you can see that reflected in like the way that either country's economy is performing. Like Canadian GDP, real GDP per capita is like falling off a cliff. And US, like they still, like nobody in the world has the capability of squeezing more and more and more out of their labor force. Like their GDP per capita output is just still humming along and growing. And I think a lot of it is like it is unfortunate, but it's like that disparity. It's like people see the economy as like almost like a casino. It's like you can win, like you're capable. And in Canada, I feel like a lot of people are disenfranchised and don't feel like it's possible to win anymore.
Yeah, there's like a big wet blanket thrown on top of it in Canada with the regulation and the taxation. Although like California is similarly taxed, and you're going to find tons of entrepreneurs there that are just killing it. So it is a mentality thing when you boil it right down. There's something about Canada that's different. We're still the West, right? Like we're not Europe, like entrepreneurially minded, like we're there.
Yeah.
But we're just like, they're our big brother, basically.
Yeah. Yeah. And I think I would argue that a lot of it is like, I think Canada's like a lot less competitive of an economy. So like in the US, you see, they have 2,000 financial institutions. We have 5, right? Like you're 6 banks, 5 telcos, like a couple of utilities companies. Everything's like oligopolistic in Canada. Yeah. Whereas in the US, it's like they encourage full competition and like fully capitalistic markets. And so here, like outside of that, all of those other markets being very legacy driven, the only thing that you can really like that still has that level of like competitive exchange is the real estate industry. And it's a highly competitive one. Like You have the most realtors per capita in the world in the GTA. Yeah, 70,000. Yeah, and
most of them are probably starving right now.
Yeah, I mean I think I just done a chart recently that was like the number of or the dollar volume of real estate transacted per realtor. So like the ratio to total number of realtors divided by the dollar value of the real estate industry, which is down like 40% year over year. Divided by the number of realtors is like the lowest it's ever been. Like, if you go back even like to like the 80s, 90s, right? So
probably why they're making it so hard to become a realtor in Ontario.
Yeah. Well, yeah. I mean, public perception around the trade is not super high, so I think they had to do something.
But has it ever been? I feel like people just never really trust realtors in general. Like, I mean, you'll have your outliers, right? Like you're an outlier. My brother-in-law's, we do a show together. He's an outlier. Like. But I feel like most of them, like people kind of just commoditize them. They just look at them, hey, you're a commodity. Well, you know, a salesperson.
Yeah, or people think that like they're all out to get consumers and like and
like a salesperson, like a car salesperson. That stereotype.
Yeah, no, that is the perfect stereotype though. Like I feel like that's really, I feel like realtors are like that.
And a lot of them earn it. Like they have commission breath. Like they just want to close the deal to get their commission.
I would totally agree. Like I think that the industry really hasn't done itself any favors, especially like since we've gotten into like the economic side of things. Like some of the videos I see people posting about like even like a lot of my content or like charts that I make or whatever like gets repackaged into people being like, oh, like buy now before rates come down, and it's like or before prices go up, and it's like that's not at all what I said, like at all, you know. So I like somebody texted me, I don't know, recently, like a good friend of mine in the industry. He's like, man, I feel like you like ruined the industry by creating this like green screen, people thinking it's appropriate for realtors to like talk about the economy. And I was like, yeah, I mean, I think like it's actually merit to that being like, I don't know if it actually ruined the industry, but it's a bit of a Pandora's box when you get realtors talking about that stuff. You know what I mean?
Because they don't truly understand it, right?
Or most don't, I would say, like myself included. Like you shouldn't like, and I always like my heading on all my profiles used to be like disclaimer, like I have no idea what I'm talking about, and like it's kind of a tongue in cheek thing, but it's like it should come with a grain of salt that like a realtor is the one like, and I just try and share information. I really just try and take information and package it, make it digestible. I try not to opine on it at all, like share. I've really noticed that about your content. I'm like, Daniel really wants to say something about this, but he's chosen not to. Yeah, it's true.
It's like, did you see this statistic? End of reel.
Yeah.
But then you just let other, people take their meaning on both sides.
Well, and I ask the audience, because like for me, it's like I always want to get a barometer on like what's going on in the market. So like my comment threads are really like where the magic happens, and and I'll have discussions with people, and I always just try and play a devil's advocate. Like I try and find like the truth, like what is, and sometimes people are like, oh, that's like, you're so bearish. It's like, the truth is pretty bearish right now, right? Like but I think a lot of people take you get this system now where you're getting like a lot of this information, and a lot of it's stuff I'm feeding to realtors, because a lot of people subscribe to my content and then they take it and they run it through their, like little spin machine, and they're like, this is what, and that's a bit of a dangerous thing when I think the majority of consumers are getting repackaged information. Yeah. You know what I mean?
Well, to your point, though, like you need to understand the motivations of whoever's giving you content.
Yeah, there is a bit of a caveat emptor, right? Like the buyer beware.
Yeah,
thing.
Like if you're on a realtor's page and you're hearing odds are most are still going to say now's the time to buy. Like most realtors are probably still going to say it. Are you saying that?
This is the funniest part, and this is the thing I've never got about real estate professionals. It's like, and maybe the it's all just in, okay, the agents who are using social media are trying to attract millennial clients, and so they're more likely to be buyers. But like by saying it's a good time to buy, you're forgetting that there's like another entire side to the transaction, right? Like, and so, like you could use the same fear-based selling, this is not advice, by the way, but like you could use the same fear-based selling. And if I was the type of person who was trying to do that, like a lot of people argue, I could say this guy is falling and you need to sell all of your houses right now, right? And it would actually be a better, like it's the same philosophy as FOMO. Yeah. It's just saying you got to exit because house prices are going to drop. Right. You know what I mean? But I always think it's just funny that everyone's like, you got to buy right now. It's like it's a good way to never represent a seller ever. You know, I don't know. I just thought the part was kind of fascinating.
That is very true, and you're right. Everybody just talks about the buyers. Just switching back to you for a moment, like as far as like an investor's journey, like what's your interest in real estate? Like what what type of stuff do you go after?
So right now, I'm honestly like pretty liquid. So I've been working with a fund of some great guys that are like more sophisticated than I am, I would say. Like I kind of am maybe the junior guy in that group, and I just try and absorb as much knowledge as I can. And we've been like sort of portfolio building for bigger institutions. So, I like, so my thesis is that, you know, I agree that when people say, when they show the population growth curve, which just came out again today, by the way, and they say, you know, real estate's going to the moon. Like, I agree that population growth is the bull case for Canadian real estate. I just see it a little differently than most people. So if you look at the population curve that everyone's sharing, where it's just like a moon, like it literally is just like a hockey stick graph. And you look at, but break that apart and look at non-permanent residents versus permanent residents. So immigration versus like foreign,
like
temporary foreign workers, students, etc. Immigration is basically flat now, and the remainder is coming from temporary foreign workers or other non-permanent residents. And so NPRs, non-permanent residents, can't buy real estate. They're banned from it for 2 years. So, and who knows how long that's going to last, but at least for 2 years, all of that demand is going into the rental pool. So if you can buy properties that cash flow and have potential to add units, because that's the next piece, is that we're seeing all levels of government now competing to upzone properties faster, then realistically, that's the most incremental value creation that you can do as an investor. So it's not necessarily that you have to buy everything ahead of this huge spike in population. It's that you have to create more units, right? So my thesis is like, if you can buy, I mean, if I were to say the perfect property, it would be like major arterial road in a smaller, you know, second tier, third tier market that cash flows. And, you know, the easy calculation probably is you just need a cap rate that's higher than your cost of capital, I think, right? Like you need to.
Well, I mean, you got your amortization there too, right? Which kind of, it's got to be lesser, you know, so if your cap rate's, what, 7?
Yeah, I mean, if you're a 7 and you're buying it like a 5 or 6. You'd ideally want
your interest rate to be 5%, you know, at least just to break even, right? That 2% kind of difference. And I'm ballparking. I'm not looking at a spreadsheet to tell that, but so for you, are you waiting for a moment to sort of get into the real estate market as an investor, or?
Well, so I just exited like a portfolio, like the funds would be transferred sometime this week with the guys that I was mentioning. So we brought a family office in to take out my equity. From a portfolio that we built, and that was all like 2, 3, 4 unit stuff. We buy in like fringe markets, like 2 markets in Canada, so like rural Sudbury, and then we like the pocket between Montreal and Ottawa, like Cornwall especially. Great market. And I honestly don't know yet. Like I think I'm comfortable being like, this is obviously, there's a big paradigm shift happening in the economy right now, and I'm kind of just really trying to create my next investment thesis. I like Section 8 in the US. Like that's a big one for me, that I've been spending probably the majority of my time researching. And then I think MLI Select deals, like development of smaller MLI Select deals, like I think a lot of this infill stuff, like you're seeing Vancouver just upzoned to 6 units, Toronto just upzoned to 4 units. Like I think so you know, in Toronto you could do 2 4x4, like 2 side by side, and that would
meet the MLI Select requirement.
Hit MLI Select, So I think my only thing is like I'm trying to decide whether or not MLI Select actually makes sense, or if it's really just like people rationalizing that it makes sense because you can get a high valuation, so functionally overpay or over lever the asset and then spread it out over
the asset, right? Like,
so
multi-res is technically overvalued because of MLI Select.
Yeah, I mean, well, that's why that's why the bottom isn't falling out on it, like other asset classes, literally just because it has. I mean, and industrial is very similar. Like industrial has a 95 LTV credit product, or pretty close. Like owner-occupied industrial operators can get high loan-to-value credit
through an insurance program.
No, through BDC basically.
Okay.
Yeah, they have high LTV products. I'm trying to think of like the language that they use on their website, so I'm not like saying anything that's behind the curtain, but like they will give owner occupied financing for guys who are buying industrial, and I think that that's helped support industrial as well. Industrial hasn't really blown out. Obviously, the sub 1% vacancy helps. And same, like both those asset classes, multifamily and industrial, are sub 1% vacancy in most major markets in Canada.
Makes sense. Like, you put so many people in the country, we need to support them. So
and
industry has to support them.
Well, and I think a lot of like your excess demand from retail is moving into the industrial space, like because it's all last mile stuff, e-com, like that, all that like consumption gets moved into that environment. And then you're also seeing like this, like that, like the soft industrial where like you got like a, I don't know, like a taekwondo gym, or like, you know what I mean, like a martial arts academy is like moving into some of these smaller retail or industrial formats, or like people call that industrial, but it's not really. Like that's, you know, it's just commercial property really.
Yeah, so industrial, like for as far as like what most zones are going to allow, like they're not really going to allow office space, right? Or would they?
Well, like employment lands, I guess, is like, so you're seeing like a lot of these like logistics parks and stuff like that, and I mean they get backfilled with whatever they can, right, to fill like, so we see a lot of those, I guess, like more commercial stuff. But yeah, I mean, like hard industrial doesn't really exist anymore in Canada.
That's a fair point. Right? Yeah, or they're trying to get rid of it as fast as they can.
Yeah, it's
like
more
the Hamilton Harbor or something like that. Yeah, that's fair. So yeah, I like the Section 8 idea too. Yeah. Although, I don't know, like what would your angle be? Would you be like getting a group of people together, asset manager, and not involved directly? Or would you be building out an organization yourself to do it?
It's tough to say. Like I'd probably just want to test a couple deals first and just see what it's like. Like I think I have to take a deal like cradle to grave to see like if I can even, like the portfolio that we did in Canada, the portfolios that we built in Canada, and those couple of markets where we brought in a family office, like all of my partners are still in that fund, and the reason is and I'm still a very minority investor in the fund, but the reason that they're still in it is because like they're the GPs. Like I'm not. I'm not really a GP. I've learned that like from the process. Like I think I'm good at like formulating an investment thesis. Like that whole thesis was mine. And then I think eventually when it comes to execution, like there's way better people. So it's can I build a team? Do I need to build a team? How easy is it? Like I just have to kind of go through it all methodically. So I'll probably just buy a Section 8 like in the next like year or two. Like probably just.
What state?
I don't know. I'm looking at like Ohio, obviously, but like Ohio's like
everybody goes to Ohio.
I know, and I don't know why. Like maybe we can chat through it. Like I think a lot of it is like you're hearing about these like programs with Cleveland where you can go and actually like ask for an increase in the rent on Section 8. There's a couple of other areas. I don't know if it's just because it's close to Canada, maybe, and people can go down and manage them.
It's like one of the closest states that's just so landlord friendly.
Yeah, but see, this is the fascinating part. Like with Section 8 is like I don't know if the landlord friendliness actually matters all that much, right?
Because the government's the one paying you,
and because,
but they could very well destroy your place.
But aren't they disincentivized to do that because they could lose Section 8?
They lose Section 8.
So like I think that it's a little bit of like And I'm wondering if there's like almost a bit of an arbitrage to be found. I mean, you can't beat Ohio on a cap basis, I don't think. There's a couple, maybe like, I don't know, like Mississippi or like, you know, Alabama. There's a couple like areas that we've seen.
You're just saying in general because there's a lot of very low income cities in Ohio. Yeah, like they're all pretty much like Cleveland's like losing population. Youngstown, where I once invested, horribly losing population, and then
you're Akron.
I don't really know about Akron, but I know Columbus is the only one where it's like a lot of government and it's very like recession proof and does well. Like it doesn't lose population. So I mean, I had a stats and data guy come on my show and he was singing the praises of Columbus.
Yeah.
Not that I've invested there.
Columbus is like one of the things I look at is like, do they have cranes in the sky? And Columbus is like building high rise right now, so it's like, okay, like somebody made a way bigger bet than I did on that city, so like maybe but it is way more expensive, right?
Yeah, so exactly. So more expensive.
The caps are like 100 bips less than all the other cities that we just named. So
right. So I guess it comes down to, do you believe that in a recessionary environment, if that's where the U.S. is going, and we'll get to that because you're the guy to ask. That's why you're here.
Maybe, I don't know,
and other reasons. But so do you believe that those cities will do well? And I am curious. Like, what is your outlook on the next 12 months? Because so many of the viewers of my podcast now are U.S. like investors,
right?
Canadians, but investing in the U.S. And like, what do you see coming? Do you think like, I mean, everybody's been thinking recession for a very long time.
Yeah.
And then the idea of a soft landing where they'll start to decrease the interest rates as the recession proves itself. What's your outlook? I
think Canada and the US are very different, like in that respect. And I think most people would agree with that. So what I think would happen, like what I think happens is that this Bank of Canada has to cut a lot further than the Fed, and that it ultimately results in devaluation of the Canadian dollar. And we end up with we end up with the Bank of Canada being comfortable with an inflationary regime for a period of time. I think they've kind of like accepted that we're in an era of fiscal dominance and they can't outcut how much the current administration is going to spend. Yeah. Right? Like the government is always going to outspend however much deflationary impact they can have, I think. Yeah. And that's fiscal dominance. And so they might just kind of concede defeat on 3%. I mean, we're at
3.1, right?
Yeah, we're at 3.1 and 100 bips of that, like literally a third of that 3.1 is mortgage interest. And so once we're either over that curve or they cut that back out, you can be in that 2 to 3 range without issues. The challenge becomes inflation's pretty easy to actually guess what it's going to be 6 months ahead if you just look at last year's curve. Like, was there a big spike because there was a big spike in oil, and it's just base year effect, right? So you're just drawing a line from this point last year to this point this year, and if you just ride the price curve of most things, you can kind of forecast what it's going to be. BMO is really good at it. They've done a lot of forward-looking analysis on inflation. Like when Chrystia Freeland took the victory lap at 2.6 inflation, and BMO was like, inflation's going to be 3 point whatever next month. Called it to exactly what it was going to be because you can see it on the price curve. I think Canada could be comfortable with inflation and kind of a more stagflationary economy, literally just because it's the only way to kind of solve all of the problems that we have ahead of us. So we have a pension system that, without admitting it, is going to run into some problems. We're currently not at the replacement rate we need to be. It's why they are pushing for immigrate. It's why they're pushing for such a massive population growth, and they're still not even hitting it. I think we need to be closer to a 3-to-1 working to retiring rate, and we're closer to a 2-to-1. Okay. And so that's a big problem. That entitlement system could face some challenges alongside a bunch. It's not a cheap country to run when you have free healthcare, et cetera. And so you need to keep the taxable base, right? Yeah, even
because if you put I don't know what their deficit is now, but through the era of the lockdowns going hundreds of millions or hundreds of billions in the red, it's obviously stupid, and those effects of inflation would have played out. Would you agree with that? If they just stopped spending in deficit, those effects would have just played out without an interest rate hike. Yeah, to a large degree. Maybe you still have to cool things off with an interest rate hike, but in essence, if you just stop the overspend, the effect plays out, and then people can go back to normal. But as long as they keep spending that way, they're going to have to keep sucking up the extra dollars with interest. Yeah,
I guess it's tough to say because there is that's a big increase in your money supply as well, and so that can have
compound sounds right.
Yeah, well, hypothetically, in modern monetary theory, it should compound. It should go out and earn a return, and then they can tax it back out.
Because what is the current holdings rate with the banks? What's the requirement now? Because it used to be 10%. You had to hold 10 cents for every dollar you lent out. Yeah, it's nowhere near that much now, as far as I understand. But I'm actually not even sure what it is anymore.
Yeah, I'm not sure either, honestly.
So that's the creation of money, though, right? The banks get deposits, they can lend that money back out. So you're right. If you increase your supply all of a sudden, it's going to play out more and more over time.
Yeah. And I think there's a lot of wealth creation that you can't, that took place during that period of time, the inflation of assets, if everyone's house, until you see deflation in that asset class, if people can still go and get and top up their loan to value on their house and pull money out of the ATM and go and spend it, there's still so much that needs to deflate before you're in the clear, I think. So
do you see real estate values coming down for years to come?
It's such a good question. I can explain kind of like why either one would take place, but I think the reason, to go back to the inflation thing, like I think the reason that they would be comfortable with long-term inflation is because they need values to stay or to come back. Because that would relieve a lot of pressure from the pension system if boomers are just wealthy enough from their assets that they're not they're not too reliant on the pension system.
So you're just kind of narrating this yourself.
Yeah, I'm just hypothesizing, right? So it's like that. And then, and so this is what really led me to the US thing. It's like, how do I get levered exposure to USD, right? That was like,
that's great.
That was my thought on like buying US property.
So you think the US dollar is going to be more resilient than the Canadian dollar?
Well, if I just look at Canada versus the US, like the US, so in 2008, the US solved their credit addiction, right? Mm-hmm. They had a comparable credit addiction to what we have today, and we just started ours. Mm-hmm. Both central banks dropped their interest rates to near zero. Canada left theirs there for a long time, started increasing it a little bit in like
17, 18, right?
Yeah. And then kind of had to come back down. Well, that was
20
the Fed,
that came down.
The Fed was cranking it up a little bit at that point too.
Yeah.
And I think it was the rest of the world was kind of like, no, you guys got to back off a little bit. But I think what seemed to take place was like Canadians just started getting hooked on credit. And that was kind of like when real estate really, really started roaring here, right? Mm-hmm. It was like everyone was buying a McMansion and a white BMW, and everyone in Canada was in the middle class and whatever. And the definition of the middle class really changed here. And so we still need to pay the piper for like that whole period of excess. It's like Canadian, we just reached our all-time high in household indebtedness again, right? 118% debt to household income. The US is like at less than 100% or 100%, right? The only other comparable countries that are like have as high household indebtedness as we do is like Switzerland and the Netherlands, I believe, and maybe Australia. And all of these countries, regardless of what rates are at, it doesn't matter if rates come down to 4%. Like that's still just a reduction in the borrowing cost of money that we still owe as Canadians, and our economy isn't growing anymore on a per capita basis. It's shrinking on a per capita basis. So there's really no way that Canadians will be able to deleverage to pay that all back unless the value of a dollar decreases, right? And so it's inflating away that household indebtedness, the relative cost of that household indebtedness. And so I could see the central banks saying, we're okay cutting either further or earlier or whatever, diverging from the Fed a little bit, especially if oil's still high, because that kind of keeps our currency up a little bit, but diverging from the Fed a little bit to reduce the buying power of Canadian dollar to stimulate foreign demand or whatever it is, right? Like you can bring a lot of people back into the Canadian economy, investing in real estate, by making Canadian dollar cheap. And then also just like resurrecting that inflation as a tool to kind of like solve. I think it takes a problem that should be on the burden of all of the people who are way over levered, who need to deleverage, and it spreads it across the entire economy.
It's very communist.
Well, I mean, and most people would argue that that's kind of from a policy perspective, the direction our country's heading. And I try and stay out of actual politics, whatever. I don't know. I read a lot about it, but I don't. It's I don't know. But it's plausible that that would. So if I were to guess, that's kind of what the way things are headed.
Hi friends, I just wanted to take a moment away from the episode to tell you about my brand new structured coaching program. This is the first time I've ever offered a structured coaching program where we'll have regular meetings in addition to an intro call to go through what your goals are and help you get on a plan to achieve those goals within real estate. So if you've followed me for some time and you feel that I would be a fit for you to help you achieve your goals in real estate based on my skill set, based on the topics we cover on this show, I encourage you to head over to my website, andrew-hines.com/coaching, and fill out the questionnaire so that we can schedule a call and figure out if it's a fit for us to work together. Let's face it, most people could benefit from a second set of eyes and ears going over their strategies, different deals that they're looking at, and helping to springboard ideas back and forth. This is a program that's exactly for that. So if you're looking to build confidence in what you're doing in real estate investing and get very clear on what it is you're trying to accomplish, this might just be the program for you. Take a moment, fill out that questionnaire, and let's schedule a chat. I agree with you on a policy side of things, like even like the rhetoric that you kind of hear out there. It's like, well, communism hasn't really been done right. You know, socialism gets a bad rap. You know, they never really did it. You got your Mao and your Stalin, and they just killed people. It didn't work. You know, if we had an altruistic leader, we could do it right. And yeah, I agree. There's obviously we move left and left as we kind of yo-yo back and forth a little bit to the right when, you know, the conservatives come in every 8 years, and, you know, they don't really ever move anything back towards the right. They just kind of slow things down, and then we, you know, go back to a heavier push. It seems. That's my take on it.
The challenge with like communism, from my perspective, is like if you read Das Kapital, which is like the textbook for Marx's work prior to the Communist Manifesto, which he did with Engels, it was like that communism has to be built on the back of a strong capitalistic system. And so you look at China and the way that they're open about, you know, trying to implement a more purely Marxist system. And that's why they came up with these economic zones that are allowed like full blown capitalism, and that you have to build it on the back of that, because communism causes growth, and the growth is necessary to have a strong enough system to properly distribute everything. Who knows whether or not they're like now like, oh, we're actually really good at this capitalism stuff. Like maybe we should just, you know, get rid of that one. But it seems like they're still like bringing large businesses into the state and all of those things. But Canada doesn't even have that. Like we have like some oligopolistic businesses, like I described earlier in the episode, like telcos, etc. So, you know, you already have these like very easily distributed like things that they could just start bringing in, but we don't have like an actual strong capitalist system that's like a diversified economy. You know, like our economy is like all those oligopolistic businesses, and then like a bunch of resources that we sell to the states that they sell back to us, and then housing. That's 100%. Like it, really, right?
Yeah, we don't have that much industry. Like if Canada was really doing what Canada should be good at, you know, we would have a lot of people who work with their hands and help with the mining of minerals and things like that needed for the rest of the world.
Or even the creation of housing. Like that's a fascinating one, because like, did you hear that the Bank of Canada presser where they're like, they pushed him like a couple of times on, I can't remember which banker it was, but they were like, so of 1.2 million people who moved to Canada, like the population growth that we saw last year, how many people work in construction?
It's like none.
It was 455 people. It's like, so.
I could solve the housing crisis and a heck of a lot of the inflation problem by reducing the cost of housing with very simple approach. Cut all taxes, cut all development charges across the country on all new construction. Cut the regulations back to what 1990 standards were for home building, and just get people in the door, drop all your standards, drop like anything you can do to drop minimum requirements, you know, keep it reasonable. Sure, you'll bring developers back into this country and they'll go on steroids. Like, I think they're doing something like the wartime housing approach. I don't ever want to put that in the government's hands. That, you know, that's just not a wise thing to do.
Well, it's literally just like a booklet of architectural plans. Like,
oh, okay.
It's
so
like,
they're not going to start their own company and like they did before and build them all?
No. Well, I mean, that's a good way to bring the per square foot buildable costs up by
a lot, right? Because anything they touch is just like ridiculously overpriced, right? Like I just noticed, like I built very recently in the US, and like we're hard costs of like 110 a square foot. Here you're like 3 times that. That, like on average. It's absurd.
In a city with a lower
average income. I mean, I'm referencing Southwest Florida, which their average incomes are a little lower relative to the property prices because it's more expensive there. But still, like, you know, way more affordable than here. So I'm just thinking, like, if they really wanted, you know, don't tax their income. Like, give developers every incentive, and then give municipalities every penalty for slowing them down.
It's the MERB program was like that, where they would allow like private entities to build. And this is the 60s and 70s, and I think they're really trying to borrow from that in present day. The problem is it's still just credit fueled, right? It's still just MLI Select. It's like, okay, how much can we indebt these people? You know what I mean? And strap them to government debt, like for 50 years now. We're on like 50-year AMs. Like now you've basically bonded out in to the tune of $60 billion, you've bonded out the Canadian economy on mortgage-backed securities for 50 years. Like if you're issuing $60 billion worth of MLI Select debt today, I mean, not all of it's on 50-year AMs, but like even if it's on 30,
40,
even 25, like it's like you're bonding out that amount of capital into the housing market today.
Yeah.
It's just, I don't know. Like, I think it's going to get a lot of housing built, to be honest with you. But
yeah, well, they need to. I just like, I think abstractly sometimes, as I think you do too. And I just like, I'm like, how many people actually make real tangible things anymore? You know, like if we just sit here, I mean, content, you could argue, is that tangible? Sure. Okay. Let's exclude that from the mix. But I mean, the amount of people who sit behind a desk, work on a computer versus people who grew things in a garden, put, you know, framed a house and stood walls, you know, did things where there's a real result at the end of the day. Like the latter is going to be needed in the hardest of times.
For sure.
But the former isn't necessarily.
For sure.
That's so what would Canada's dynamic look if they really started encouraging people to do that, right? Because I don't know what it was like when you were in high school, but when I was, it's like you were like missing out unless you went to university. Like you had to be going to university. Yeah. Skilled trades? No. That's like what the plebs do. You want to go to university.
And it's so ironic in hindsight because like everyone, like I grew up in a small town where like most of my friends went into the trades.
Trades, yeah.
And so, you know, when I was in university, they were doing their first year apprentice, second year, maybe buying a house. Making money. They bought a house in like their third year apprentice.
They're so much further ahead than most people.
Yeah, no debt. They own a house. They got in the housing ladder like 4 to 5 years earlier than everyone else. Like I know guys that are like multi-millionaires just because they bought, you know, they built a skilled trades business during the period of time where like everyone else was studying and then and then in their entry level job paying student loans, like, you know, living at home with their parents. Like it was like a 10-year head start. It really was, if you like think, you know, and I don't know, like I would imagine it's probably still that way.
Oh yeah, like I don't want to encourage my son to go to university. Right. As much as like I met my wife there, like we had so much fun in university, like partying, being idiots, you know. And I don't necessarily encourage all that, but I mean, I had fun. Yeah. But I'd rather him have the head start. I'd rather him be resourceful. And, and learn.
I don't know if those are like, I don't know if like partying, having fun, like learning how to do laundry, like meeting pretty girls is like a necessary thing. Like a part of the human experience.
I don't think it's natural.
Well, it's just not setting people up for like success. We don't need to centralize that like experience. I mean, it doesn't need to be 4 years long either. You know, it's like, to me, it's like you can do all of those things, but I think like getting out of school and like being a productive contributing member of like the economy is probably the most rewarding thing from like a personal development perspective that you can possibly do.
Well, and if you have your home, like if you have, and this would solve the population crisis, if everybody just went into skilled physical trades and started making money right away, they'd feel like they had their shit in order a lot sooner. And what do people do once they feel that way? They have kids. They start a family. All the ones that are waiting until they've got it figured out at like 37 years old and then say, oh, okay, I think this is about as good as it's going to get for us. Let's start now. Yeah. You know, it changes the outlook.
I think it's a different value system as well. Like I look at all of my friends, and like this is just coming, like I'm thinking out loud here, but like I look at all my friends in the trades, and like they were the ones who have kids, and like all of my friends who I met from university and who were like they're just starting, but all my friends who were in the trades have, you know, like I had kids early, so all my friends in the trades had kids early at the same time as I did, and like, but otherwise, like anyone who is more from that knowledge work world, like it's a big weighting thing.
It's like the like Canada will be carried on their backs, like the kids that these people have.
It's crazy.
But the nice thing is the kids are likely to do what their parents did. So like it's almost like it'll naturally bring back the trades. They'll have to, because they'll see their parents did it. They'll get into it. How many kids do you have?
Two.
How old?
6-year-old and 4 months.
4 months?
Yeah.
Oh, you're in it. Okay. I got a 2-year-old.
Nice. Yeah. It's a great age.
Yeah. I just like, you guys waited a good long time before deciding to do it to yourselves again. Huh?
Yeah. I had two separate parents, but but I did, I suppose, wait a long time.
It's tough for me to even fathom doing it to myself again. But of course I want to, and I will, but that's the plan anyway.
I feel like it's like the ultimate calling, you know, like it's just it is like I'm definitely, I forgot, like a lot of people are like the sleep. It's like, it's not that, honestly. It's like you want to spend so much time with your kid, but you also like have to provide, do work. all of these things. And so the balance is just tough. Like just being able to have it all.
Yeah. That's the hard thing for me is because like I actually feel guilty if I go like 8 hours away from home and don't see my son. A little part of me, especially if he was doing like something really like cute when I got home. I'm like, oh man, I missed it all.
Yeah. No,
that's the hard part.
It is 100%. It is. Yeah. It's, and with that being said, like I found like I have really bad ADHD, and I found actually that like becoming a parent helped me to like learn to prioritize things properly, because like there was actually like a reward system. It was like, if I do my work, I can be more mindful when I'm spending time with my family, right? And so that was,
and I feel like it's being productive too. Like for me, it's like actually seeing results like in what I'm doing in my business. If I actually see like, oh, I accomplished this today, now I can feel way more present when I go home. But if I had an unproductive day, I agree with what you said completely. I'm like half there when I'm home. And that's the worst. Yeah, because my wife will yell at me. Your work she'll yell at me for it too. Why are you just zoned out? I'm like, damn it.
I'm still doing work in my head right now. I'm still writing emails over here. Yeah.
That's cool, man. All right, so let's talk about strategies and what people need to know, because like you're the analyst, as you were saying, off camera, which I think, man, people eat that up. They love it.
Yeah. I mean, I think that right now, policymakers on both the central bank and the government are very clear about what's going to happen, and people just don't want to hear it, right? Like everyone wants to tell their friends and clients to buy now before house prices go up. It's like, well, if we look at the curves of what's going on with population and what's happening on in the policy environment, it's like, sure, buy now if you want, but they're increasing the output of single family residential land right now in real time. And so you can see it happen. So a single family lot this time last year in Toronto was, you could build one house on it. And today you can build 4 houses on it, right? Or four units, right? And so if we're looking at the population curve, and primary growth is coming from the non-permanent residents, those people right now they're banned from buying real estate. But let's say eventually they're not. Statistically, they rent for 3 years. Statistically, permanent residents rent for 3 years before purchasing, and that's now been extended by the cost. We don't know how much, but like it has been extended by the cost of buying. It takes longer to save for a house.
And do you think all these NPRs are going to eventually, like a large percentage of them are eventually going to become permanent residents?
So the government like just came out with, or just teased that they're going to come out with basically a stream for NPRs to become PRs.
Okay.
And I think the reason is, if you look at the curve, you can see PR applications have tapped out. Like they can't attract people at the CRS scores that they wanted into the immigration stream. And so they're going to tap that stream of people who are already here to become permanent residents.
Interesting point you bring up, because that was actually one of those things I worried about, because I used to say, hey, like I don't know where values are going to land, because I know people, they just keep immigrating people like crazy. I know you've explained the rationale for why they need to. So yeah, we have force of interest rates pushing house prices down, and then we've got immigration pushing them up, and where do we land? And of course there's other factors too. But what if they pull the rug out on the immigration? Like what if they can't sustain it, because people start getting here and realizing, hey, it's cold and I can't afford a house and I can't afford food. I'm going back to India. I still don't think they're there yet. I think the Indians come here, they're still so grateful.
I think it's starting. Like there's data points. Like I haven't been able to verify a lot of these data points, but like 40% decrease in student applications from India. An Indian publication put that out. But you know, I mean, like it's just like the way that the education system begins, because the education system is really what's driving this. So it doesn't matter what the government does. Education system was originally targeting like STEM career students from China originally, and then gradually started to replace that with the sort of community college system, which is honestly exploitative of a lot of the people who are moving here, and attracting students from India. And I think the word is getting out that like it's not a good deal. Right, it's not a good deal for these students who are coming in.
Talk to their family back home. It's got to get out. Yeah,
and so I think when the people who are writing the checks back home realize, okay, like my child went through this program, now can't qualify for PR because because the degree that they got was insufficient to like the institution didn't get them a good enough job. Now they can't get a CRS score, and so the whole system broke because they designed it poorly. And now it's like, okay, well, do we go to another, like does the education system target another country, which you're starting to see happen with, with other countries. I don't think, I think that we'll be able to sustain a pretty high level of immigration indefinitely. The question is it going to have a net positive effect on the economy? And not just for like the Canadian economy, like the economy is all of us, right? It's all of these NPRs, it's all of these PRs, where GDP per capita can grow. Real GDP per capita can grow. Because if you can't grow your GDP per capita, then the pie is just getting bigger and everybody's still getting less of it.
Yeah.
And so, and that to me is like, it's not a recipe for us. If people want, and not to say that the US is the right model, but if you want the same economic output of the US or productivity of the US, if you want like the same ability for a middle class to exist, then you have to have that GDP per capita has to be growing, and it's not, and it's not in a big way.
Like where is it right now?
It's at like 2018 levels. Okay. Real GDP per capita is at like 2018 levels. Yeah. So we've lost 5 years of economic progress. Yeah. Right. And so everyone who's coming here, if they're assuming they were getting 2020, 2021 levels of wage, whatever, they're not. Right. And so the only way that you can really, like the economy needs to diversify, and we need to start investing in the things that are necessary to actually grow the economy. You can't just grow it with the number of people. And I think they're learning that reality now kind of in a hard way. Like,
wouldn't it just make so much sense for them to say path to permanent residency is somebody with a skilled trade? If you can build houses, like if you can, I mean, carpentry is different over there. They don't even really use the same building material, so it doesn't work that well. They'd have to like educate them on how.
I mean, like this, but like rather than like, it doesn't matter if it's if somebody already has the trade, because we're not attracting people, and like this is the thing,
educating them here.
Exactly. It's like, why aren't we pushing all of these students into the trades programs rather than some like degree that doesn't even qualify them for what they want, which is PR at some strip mall college? Like really, that's a very broken system, and they're getting let down. It's like regardless of like any, I won't even touch on like any consequences to immigration other than like the consequences that exist for the people who are immigrating here. And that, like, it's very clear to me, you can see it there taking place, right? That they're the ones being let down by the system. So the thought here is like from a real estate investing perspective is like the government, if you just look at long-term cycles of countries, look at Europe for an example. 200 years ago, everyone wanted to migrate to Europe. It was a better life and they could migrate to Europe because there was land, like before airplanes existed, right? You could travel along land to migrate to Europe and in search of a better life for your family. And so that took place. It inflated the values of homes. Homes started getting, like, look at London as an example. Flats are like old townhouses that are cut up into multiple units. Now you see homeownership in decline. Like if you look at pick countries out of Europe that like Canada might want to be like. Do they want to be like Romania? Probably not. Romania has a 90% homeownership rate. Do they want to be like Switzerland? Probably. Switzerland has like a homeownership rate in the 40s, I think. That's where we're going. The writing is on the wall. You can see it. So homeownership rate is in decline. They are encouraging existing asset holders to create more units from existing assets because it's the easiest way to incrementally increase supply. It's the most agile. You can go get a building permit. Now they've upzoned everything. Go get a building permit. You're going to spend $100 a foot creating a unit in your basement apartment rather than $600 a foot that a high-rise developer is going to create. No development charges on it. It's immediate, right? And it cuts up existing supply, which we already know we're overhoused. We have the third largest houses in the world.
Oh,
third largest square footage per capita in the world, right? And you can see, then you go look at the U.S. Number of people per household was in decline for like since Confederation, right? So like 250, 300 years. It just in 2015 started to increase again. Why? Because household consolidation is taking place as a result of a lack of affordability. Same thing's taking place in Canada. Fastest growing housing tenure type is roommates in Canada, right? So it's,
and I've experienced this as a landlord. Like
Yeah.
you see like multiple tenants moving in together. So I sign with one group of tenants and they bring in their brother-in-law and his family to like offset the rent. I'm like, okay, well, I don't like this. But yes, that's obviously the direction it was going to go.
Yeah.
It's happening here. And now you can formalize it by chopping it up into separate units.
they're telling you, like they're literally telling you exactly what they want to see done. And it doesn't matter how much we want to push back on it as a country. If people are like, you know, it's like World Economic Forum, you'll own nothing and be happy, and like they don't want, you know, they're trying to take away the Canadian dream of homeownership. It's like, okay, cool. If you want the Canadian dream of homeownership to come back and you want everybody to have a single family detached house that they own and have a mortgage on, you need house prices to go down, right? That's the only way. Or you need interest rates to go back to 0.25%, and that's not good. That's not economically productive. So, I mean, if you line up all of these things, I think I covered pretty much like every factor in the economy that matters, like to me, and just look at them. It's like that is the exact outcome. You can see it. It's like, and moving towards investment and institutional ownership. It'll be a K-shaped recovery where asset holders are on the top rung and non-asset holders are on the bottom rung, and that'll be likely as a result of inflation, not extreme inflation, blah blah blah, whatever. It's like 4%. If you own an asset, your asset's going up at 4%. If you don't own an asset, your buying power of your money is going down at 4%, and that's where the middle class exists and or disappears. And so you want to. That's why you don't want to buy real estate because it's going to go up or because rates are going to come down or whatever. It's because like that's the last bastion of being able to be part of probably the top rung of that economy from my perspective. Because like just go look at countries that are 100 years ahead of us on their long-term migration cycles, population cycles, whatever, more advanced economies. Germany, Switzerland, etc. Go look at what the urban areas look like. Young people all rent. If you live, they rent, then they meet their mate in the urban area, and then they move out into the suburbs, into the family home, and it's a multiplex, right? And it gets handed down by generation to generation, and there's a 30, 40-year mortgage on it, or it's been in the family for 200 years, and it's just like...
You think we're going to have that here?
Yeah, I do. 100%.
Multi-generational family home. I feel like here the parents sell the home and go on a cruise or downsize. If they can afford to, though. They they downsize.
Yeah, but what happens if what happens if pension isn't there? Like, or what happens if pension doesn't keep up with inflation? Like, it all I think that's the plan. Yeah. But like, how many people can actually afford to do that? Yeah. Right now.
I've definitely seen what you're saying in Europe. Like we have friends in Austria. That's like pretty much exactly what they did. They severed actually a piece of land off their parents' land and built their house right next to it. And that would be probably the more lavish way of doing it. And otherwise, you're just gonna move into the basement until mom and dad are gone, and do it that way.
But that's what's gonna happen. Like I mean, you have baby boomers who have, and like this is where I wonder if like there really is like a major recovery available to your 4-bedroom McMansions in the suburban GTA or suburban any major city in Canada. It's like that. I think that the government put the floor in with this policy where it's like now the output of that building, that McMansion, is 4 units. Yeah. But because otherwise, I mean, who are the boomers going to sell that to? Because you and I can't afford it, right? Or like our generation can't afford it. And so they're going to get cut up into multiple units, and maybe the baby boomers are going to bring their kids in, and they get to age in place. And I mean, everywhere else in the world does this. Like it probably is more naturally humanistic. You know what I mean? For us to coexist in like the same living space as family members, and it takes a village to raise a child. And totally agree. So like, there's no, I don't know. Like it's just like I think it's going to start happening. And as you start getting a Canadian population that is more and more influenced by a global population through immigration, population growth, et cetera, it just becomes more commonplace. I mean, everywhere else in the world does it. Yeah, like everywhere else in the world has, except for like the places with the 3 biggest houses per capita in the world: Australia, US, and Canada. Right. So I think it's just give it like that. That's where the horizon that I'm investing for real estate on, all of that takes place in that 30 to 50 year horizon.
What's interesting is like that model, I believe, was actually probably a lot more common in Canada and the US maybe 100 years ago. Like they would have lived with their family. Like it would have gone, they would have had the family homestead. They would have gone back to it, gone out, found a wife, brought her home or whatever, like something along those lines. And then it kind of changed away. But then for natural reasons, it seemed like it will seemingly come back.
I think a lot of it was like people were sold like individualism, right? Like, and that it was like you had to like, it's the university thing. It's like you got to go live on your own. You got to go
have your experience, like find out what I want to do with my life. Well, what about just do something productive? Like, you know, what if don't have every fucking answer? Just go out and start producing.
Yeah, no, I agree. And like, and I think a lot of these families, like they where the kids stay home well into their working lives, it's like, well, you know, you can come home to a home cooked meal every night because you know parents are retired and like it's clean, and you don't have to focus on a lot of the things that you that are time sucks, right? Yeah, because you're going like you're spending. Think about how many we were just talking about how hard it is to like have kids and balance a work life. It's like how much time and energy you're spending on like running your nuclear family. Oh yeah, you know, that could be going to being economically productive. And so I honestly think that that's just the direction that we're heading. I know it's like really out there and like you're saying like really abstract, but like to me the writing's on the wall. It's like that's the direction we're heading.
Yeah, I think that would be actually really healthy for society. Yeah. So, I mean, to bring this right back around, because I think you mentioned the hedge, you wanted to be in US dollars, or you wanted to have some money in US dollars. I was thinking that too. Like a lot of hedges I wanted against Canada, the dollar, the politics, like just tons, you know, the tax system, just ridiculous. Like it's great if you already have assets outside the country, it's a lot easier to leave if you want to. Yeah, for sure. So that's why I started buying outside the country. It sounds like that's kind of your next move too, as an investor. Would you see a case for investing here, you know, this year, next year? Because I can see some cases for that, but you got to make it on the buy.
Yeah, or you make it on like there's a lot of incremental value creation when you own an asset in Canada. So like
if make it with a plan, you're saying make it because you have plan to add units or add value.
Yeah, if I could buy like old Craftsman, like you know, like red brick, Century homes, and like key core areas that I can multiplex super easily, and I just had like a perfect system for that. Yeah, I would do that for sure. Yeah, like I love the idea of being a housing creator in an economy that like. To me, the way that you can fight back against all of the things that you just described is by like trying to fix the problems that someone is creating, right? Somebody else in the economy is creating. And so being a housing creator is like one of the most, and like we're just sitting here saying like, oh, everyone needs to be in the trades. It's like, well, we should be creating housing too then, right? We like can't be hypocritical. So yeah, I mean, if I could, and that's one of the areas that I really do want to start deploying capital in Canada is like multiplexing ADUs. I mean, we're really using the podcast platform as a way to kind of like do that. And so ideally like building MLI select deals or taking existing housing stock and cutting it up into 4 units, like looking for a land partner, like especially because like the problem is I can't like I've run them numbers in like a Toronto as an example, acquisition cost of like buying something and then converting it. You like no lender is ever going to touch the deal, so you have to do it basically all cash or like 50% cash or
private money,
right? Which I just like that's not my model, right? Yeah, like so if you could find an owner who has a piece of land and build out the system, right? Like, and I'm not saying this is something I want to do, but like I think that's where a lot of these things are taking place because there's a lot of people who are good, sophisticated owners who own real estate in the GTA, who own residential lots in the GTA that don't have a developer partner to come on and build the sixplex or whatever it is, right? There's a lot of good landholders that have good landholders, have a ton of equity.
So you go in and partner with them.
I think somebody's going to tap that equity. Like I think that's a huge opportunity. I
think that's just conversations to be had. So yeah, I'm like cautiously optimistic about Ontario right now. I know that it could go a couple of different ways and it depends on which force is stronger, whether values are up or down. Yeah. But at the end of the day, like a lot of people just are thinking different province, go to the US, all that stuff. So if you're one of the ones that's still sending out some letters or making offers or making phone calls, you're gonna have the seller's ear. Like you're gonna be able to negotiate stuff that you couldn't negotiate 2 years ago. So to me, that right there is the opportunity. Not to say like, I mean, I am keeping an eye and you know, I'll do something here if I find it to be a great deal, but I still have, you know, my energy south of the border and, you know, but you know, it's definitely worth considering. Yeah.
Yeah. I think the only other thing I would say like in Canada is like, I think the prairies and Alberta, like, you know, 30 years ago, like, or maybe even earlier than that, but like for the last century, like Montreal was Canada's city, right? It was, and then like nobody really knew about Toronto, and then the FLQ stuff happened in like the 90s. I think that was kind of like when it started to switch. Okay, and then Toronto very much became Canada's city. I could see Calgary usurping Toronto as Canada's city, and not today, but like I think that 50-year process that happened between Montreal and Toronto could start taking place or has started taking place right now. Like
Alberta's certainly popular.
Yeah, I mean, I think it's a little overbought right now, but I could be wrong. But like, it rides those like recessionary cycles. Like they like, if you look at like Ontario migration out of Ontario, perfectly good recessionary indicator is like people leaving Ontario, and then people going to Alberta, perfect recessionary indicator. So on Alberta population inflows, and it's like oil,
Even when oil's down, they're not doing new projects. People are still migrating there.
No, so
or migrating away.
Right before recession, migration into Alberta peaks. So usually when you're seeing like a huge inflationary spike as a result of oil, and then before the demand destruction takes place, that's when Alberta's like just ripping, and that's like they're there right now. Like it's crazy.
It's funny. I had friends that were out there, and they came back like 5 years ago, and then I had other friends go out there like 2 years ago. We can't buy anything here. We're going out to Calgary.
But you can't buy anything in Calgary. I mean, Calgary's a 5-cap city. Like, I mean, people sending me all these deals like they're like, oh, MLI select this. I'm like, I can't. Literally, I can't do that deal. Yeah. Right? Like, it's like I'll just do the same deal in Toronto.
Actually, Jake, my brother-in-law, was saying the same thing. He's like, people are sending me these Alberta deals. He's like, I don't get it. Yeah. You could do that deal here, except you got different landlord rules. But
I guess that's really the only difference.
Yeah, right? And a big difference at that.
It is, yeah.
But anyways, Daniel, I appreciate you coming over and
great
just
chat.
Just shooting the stuff about the economy, and it was interesting. I really liked it. So, is there anything you wanted to share? And of course, let people know where they can find you.
No, I mean, I think that we've covered everything. You can find me, just my last name is very unique, so Foch, Daniel Foch, on just Google it, and it'll probably bring you to whatever social media platform you're most likely to click on. I try and be on everything. If there's a platform that I'm not on that you want to see me on, just let me know. And then we have the Canadian Real Estate Investor Podcast, which is I mean, we didn't want to enter the space like doing interviews, because I feel like you've really cornered that market in Canadian real estate, done a way better job at it. So it was like, let's not try and compete with that. So it's very research based. Like it's and sometimes very like elementary, but sometimes like, we cover a lot of news and just go through like a lot of that stuff. So it's really more like I don't know what I could compare it to, but it, just really just two host research talking about
so an expanded version of what you put out sort of on your social media. Yeah. Which is a lot of just like insightful stuff.
Thanks. Yeah.
Interesting points to know about. And there was one thing I was going to ask you. Oh yeah. Like team wise, you must have a little social media team helping you put all this stuff out, or is it all you? Every different platform?
Yeah. I've just like, I just like really drilled down on like, what's the MVP for like content, right? And it's like, be right is like probably the most important part, because when you're wrong, then it sucks. And then, and it can be a headache because people telling you you're wrong is time consuming. And then like get it out in the most, not digestible, but like most likely medium to succeed. And so I did those two things, and I was like I can't even make the like nice looking videos on like Instagram and TikTok, because they fail for my audience, because I've built such an audience that is so used to seeing like my absolute like dog shit, like
your green
screen, like me just like bad lighting and bad audio, and so so I just like that. I just made it super easy. Like I can go, and if I had like 10 minutes in the parking lot here before this, I could just shoot a video. Like,
that's sweet, man. Yeah, you just got to get it out.
Yeah. So I don't have a team.
That's really cool though, because I would say like now going against the grain is doing what you're doing. Like, because everybody's doing the really polished looking stuff. Just do the raw ones. The raw ones, they stand out now.
Yeah, for sure.
Yeah. Cool, man. Well, let's stay in touch and do this again sometime.
Absolutely, yeah. No, I'd love to. Thanks for having me.
And now a word from our sponsor, Control and Compound.
Here's how infinite banking works in under 60 seconds. You have to save your money somewhere. Well, we think the best place to save it is inside a cash value life insurance policy. You save some money in there, it grows tax-free for the rest of your life. Then an opportunity or emergency comes along. Let's say a few years down the road, you can buy a business, buy a property, buy an income-producing asset. You leverage the infinite banking policy, borrow against your asset, take advantage of the opportunity. But your money still stays in the infinite banking policy. You're not borrowing your money, you're borrowing the insurance company's money. So your money's in the policy, it's in the opportunity, and it's providing a death benefit. Rinse and repeat, rinse and repeat. You get to retirement, and you have this massive cash value life insurance. Leverage that tax-free, and you don't repay those loans. You sit on the beach and you spend that money tax-free every month doesn't show up on a tax return, and you leave your family a huge tax-free death benefit.
For more information, visit www.controllandcompound.com/Andrew Hines.